goes against you. Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+ Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. Have you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+ Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz. why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hi, good evening, everyone in the audience. So, hope everyone is doing fine during this MCO period. So, firstly, I would like to try to make sure if you guys can hear me well. So, if you guys can hear me, please type yes in the comment section below. And do help us to like and share so that we can get more viewers, your friends and family to join us to learn more about today's topic. So in line with our Back to Basics webinar series, we have introduced several products in the market. Previously, you may have attended a session on basics of structured warrants, and backed by popular demand, today we have the essentials of structured warrants. And once again, welcome coming from Macquarie Warrants to guide us on what are the essentials of trading structured warrants. So hi, Coming. Good to have you again. How are you since the last webinar?
I'm good. Of course, like it has been a very exciting month, June for us, because we have successfully just launched some new products yesterday. So it's something very new to the Malaysia market. So if you have heard about Alibaba, Tencent, or even like Geely, those are the kind of names that we're looking at. So we are very excited to introduce the new call and put over all these Hong Kong stocks in Malaysia. So if you have any questions regarding all these new products, please leave it on the comments below as well, so that I can walk through all these things with you and perhaps share a little bit more about, like, the topic today is the essentials of trading structured warrants. But of course, if you can share this particular video with your friends, which you think they might benefit from this, I might actually share a little bit more than essentials. All right.
Okay. All right. So to the audiences, if you have any questions on structured warrants, like Cumming said, or anything at all, please let us know in the comment section below. And at the end, in the Q&A session, Cumming will answer your question. So stay until the end. And so without further ado, Cumming, the floor is yours.
All right, thanks, Don. I think before I start my presentation, would like to just get all the audience to confirm that you can actually see my screen here. With the title Essentials of Trading Structured Warrants. So if you can see, kindly just type M for Macquarie. So if you can see my screen here, please type M so that at least I know that it's live. All right, so just simple disclaimer, whatever I share today will be mainly based on education only. But of course, we will do a best effort basis in terms of answering as many questions as possible at the end of the webinar. This will not actually constitute any form of recommendation from Macquarie and myself. So just, for those who have not attended our first Back to Basic Warrant webinar, I just wanted to give a recap on what happened back in 2nd June. So for those who want to actually learn more, like from the basic, from beginner level, I strongly suggest you to actually go back. You can actually watch it again on M+ Facebook page by scanning the QR code here. So what we have covered in the last webinar, I think first of all, essentially what is structured warrants? What are the main differences between structured warrants and company warrants? Second, how are structured warrants named? Why is it some warrants is actually called the top glove C1 as some is top glove CB? Next up, why trade warrants? There are 4 reasons why to trade warrants. We also cover the differences between a call and put warrants, and we give a few live examples. We also go through the key warrant terms such as delta, premium, warrant sensitivity, data, and effective gearing. Which I think another point which is very, very important here, especially for newcomers. You're new to the market, you're new to this product called warrants. You might want to check out the video to learn more about warrants expiry. What happens if you hold the warrants until expiry date? And last but not least, where and how you can actually get the latest warrants information and update. So this is the recap for the previous episode, the last webinar we had. But today, I'm going to share something even more interesting. But of course, this one, I will consider it as a level 2. You need to learn the basic before you move into this. And this will be probably more suitable for investors who have at least have like 1 to 2 years experience. You know how to look at the market from macro and micro perspective. So, and of course, I did highlight it during the end of the last webinar. I'm going to touch on index warrants, which is something very, very interesting. But for the information, in terms of warrants in the market, there are 2 main types in terms of underlying. So if you talk about normal stock warrants like top glove call, or you talk about DNEX call warrant, those are single stock warrants, which is very common. But index warrants, not many issuers are issuing, are covering this product at the moment. So far, there's only Macquarie and CIMB. Macquarie being the largest index warrant issuer, we currently have 4 different index. Excuse me, sorry. Macquarie, currently we have 4 different index warrants, which is issued at the moment. So if you talk about index warrants, we have the S&P 500 warrant, which cover US market, the HSI, and also the Hang Seng Tech, which cover Hong Kong market. Malaysia market, we have the KLCI. And last but not least, we have the iShares China A50, which cover the China market. So all in all, what's the main difference here? Like why trade these index warrants instead of like the normal stock warrant? I think mainly is because if you are looking at more on a macro basis, a lot of times it happens to us in Malaysia, whereby other markets are doing very well. The US overnight market is up 300 points, China market is up, Hong Kong market is up, but Malaysia is down for a number of reasons. It can be due to the infectious COVID and also the high COVID cases. At the same time, political uncertainty. So you might want to consider to also diversify your portfolio into some index warrants here. So to learn more about index warrants, you can either scan the QR code here, or you can actually put your questions on the comments below. Like for example, if you're interested to trade HSI, what do you need to know? Like probably, I think that's the best question that you can actually post to me. I'm happy to walk you through, from the step 1 to step 4. But all in all, in order to trade structured warrants, you need to have a CDS account. So if you don't have a CDS account, you can actually put comment down there, and Dawn or even Kate, they will share you a link where you can actually open an account with Malacca Securities. So besides whatever we can offer here, if you have intention to trade like NASDAQ, for example, NASDAQ index, do let us know, put down on the comments. At least we know that there is a demand in the market. So subsequently, what we will do our best to make it available on Bursa Malaysia in the time to come. The latest addition that I wanted to highlight today is we did have all these HSI, S&P 400 for more than 4 years now. But this HS Tech Index is something very new, something very interesting. Because when you look at the composite of this HS Tech, I would say all the companies which form the composite for HS Tech, they are all large mega cap tech companies listed on the Hong Kong exchange. When it comes to tech, there are many different kinds of technology stocks we're talking about. But of course, if you look at the top four biggest one, Alibaba, Tencent, Meituan, and Xiaomi, they are mostly involved in e-commerce, number one. Number two, they are all internet giants. Xiaomi, is the largest smart home appliances manufacturer in China right now. So, but of course, like to understand more about all this, how it works and all these things, I would suggest that you put your comments down there, so that if you want to know more about Xiaomi, probably I can bring you through. But what you need to know right now is, let's say if you are bullish or either you are bullish or bearish on these four stocks, Alibaba, Tencent, Meituan, you can, instead of looking at the stock directly, you can choose to actually look at HS Tech Index. And why trade index warrants? Why trade HS Tech, Hang Seng Tech Index? I think the first reason is diversification, I mentioned earlier, especially when your current portfolio is just 100% Malaysia equities. So when Malaysia equities underperform the peers, you might be thinking, what is happening? Should I actually allocate some of my funds to actually other products or other markets? So having to actually buy into index warrants also gives you diversification in the sense that you are not exposed to one single stock risk. Like for example, what happened to Alibaba back in March when the Ant Financial got stopped from their listing on the Hong Kong exchange, and subsequently Alibaba took a big fall in terms of the share price. So if you are gaining exposure to HS Tech, there are 30 stocks inside there. So unless all 30 stocks actually drop at the same time, otherwise you won't experience any form of like limit down or limit up on most of the time. Ease of access, mainly because Macquarie, what we do is we bring all these interesting index warrants product to Malaysia. We list it on Bursa Malaysia. So you don't have to actually go to like Hong Kong Exchange, open an account there and trade. By using your account with M+, you are able to actually trade these warrants, and the same brokerage is applicable. So if you are enjoying 0.1, 0.2% on your stock trading account, then the same brokerage will be is applicable on your warrants trading as well. Higher volatility is also another reason why investors, like index warrants, because as compared to, in the past 2 to 3 weeks, Malaysia stock has been either going down or is moving sideways. So in terms of opportunity-wise, not many. But if you compare it with S&P 500, there are always opportunity on a daily basis. Look at Hang Seng. On a daily basis, it's moving at least 200 points, like 150, 200 points. So even if you're doing a day trading, in order to make a 1 to 2 ticks from index warrants, it's actually pretty easy. Last but not least, which is the most important one when it comes to opportunity, available products for you to actually go long or go short. Because if the market is going up, it's fine because you buy, just wait and hold. You probably make some money from holding on to the stock. But let's say what if the stocks are actually coming down? What can you actually do? You probably can't do anything because right now we still have the short selling ban, so you can't short the stock. Whereas for the index warrants, you can actually long or short by buying into either a call warrant or a put warrant. Don't worry too much about this first. I will show you an example on how you actually can make money from a downtrend market by buying into a put warrant. A very important thing to take note for all these index warrants, this is super important, so you must bear in mind. So, I mean, if I don't put the title in such a way that tracking underlying futures, not cash, probably I think most of you could be wondering, let's say if I buy into a HSI warrant, right, I should be looking at the Hang Seng Index, am I right? If you think it's right, then probably you can put a yes. But the answer here is no. Okay, we are looking at underlying futures. We are looking at futures contract here. So for those who do not have access, you worry that the price discrepancy is huge, you can always get the live futures prices for free on the Macquarie website, which is malaysiawarrants.com.my. So this is how our homepage look like. This is our homepage, and on the right hand side, you'll be able to find the live index futures. We have the HSI, the HS tag, and the KLCI. So don't be shy, it's free. Don't charge you any money at all. So just go to our website and just click refresh button to get the live futures prices, so that to also ensure that when the HSI futures move up or down, your warrant is actually tracking the price movement accordingly. So to access our homepage or our website, you can scan the QR code provided on the screen here. And if you have any questions on these live index futures, then also just a reminder, put your questions on the comment section below. Another thing, besides what kind of underlying or security the index warrants are tracking, I would also want to flag out the market making hours, which differs from one underlying to another underlying. So if you just look at an example here, if we are talking about the HSI, okay, if you look at HSI and HSI warrants, what will be the timing, for market making? It will be from 9:15 until 11:58. This is for the morning session. And for the afternoon session, evening session will be from 2:30 until 4:28. So the market making hours actually follow the futures trading hours. So futures start trading at 9:15 until 12, and they will continue at 1 until 4:30. But unfortunately, Versa, we are closed from 1 to 2:30. So we will only resume market making at 2:30. So the similar thing applies to like the S&P 500, which I think a lot of people are actually surprised, when you look at S&P 500 here, the last one, S&P 500. You can actually trade them from 9 until 12:29 and 2:30 until 4:43, which is similar to our Malaysia market as well, because the futures that we are tracking is actually called the E-mini S&P 500 futures contract. So this particular contract trades 23 hours a day. The only time which is not trading is actually in the morning, our time, about 4 to 5 a.m. So you should feel comfortable, that even when S&P 500 futures is moving, our warrants definitely will be tracking it. Let me just. All right, and what's to take away from this particular slide will be, what I wanted to highlight here is, as an investor, you need to make sure that you only trade during the market making hours, because as an issuer, as a market maker, Macquarie will not be providing any liquidity. You will not see any bid and ask prices for these warrants outside of the market making hours. It's just like, for example, if you are trading HSI at 9 o'clock, you won't be seeing any fair bid and ask prices or any volume, because HSI futures is not open yet. And during public holidays also, try not to trade these warrants. So since we talk about public holiday here, so Hong Kong will be shut tomorrow. So for those investors who are thinking to trade HSI, don't trade, because the market is shut. So even if the warrants are moving big, having to undergo big movement, don't be tempted with it. Better check with us first if you are unsure when is the holiday. When it comes to warrant selection, I believe, everybody has their own set of secret recipe, secret sauce. There are a few things you need to look at before you choose to buy that warrant in order to actually make a winning trade. So if I may ask, maybe some of the audience here who are experienced in this, like when it comes to, let's say, if you want to buy a structured warrant, right? What are the things or what are the steps that you actually go through? Before you came into the conclusion that, oh, this is the warrant I want to buy. So we really appreciate it if you can actually share this with us. Even as a speaker, I would always like to learn whether there are better procedure, better warrant selection choices available in the market. But for us, we do have very humble 4 simple steps that we always use to guide investors who are new to structured warrants, who doesn't know how to select warrants yet, which is very simple, very easy to understand and remember as well. First of all, you need to be able to tell whether that particular underlying is a bullish underlying or is a bearish underlying. So let's say index-wise, KLCI. If you have any view on KLCI, whether it's going to go higher or go lower, please share with us as well. So, it depends because everybody has different view. But if you look at technical point of view, looks like, the support is broken. KLCI is drifting lower. So assuming that if you have a bearish view, what you should do is, if you are bearish, look for a put warrant, because buying a put warrant is like short selling a particular index. So next, after you have a view, step 2 will be setting a trading time frame. You need to identify, let's say you buy a put, you short the market, when will be a good level for you to take profit, for you to actually sell your put warrant, and how long do you think it takes for that particular price to reach? Maybe in 1 week, it can be in 1 month. So having to have a different time frames that also will affect your warrant selection process, which I will share later based on your own trading profile, what kind of warrant expiry you should choose. Moving on to step number 3, effective gearing. So effective gearing is a measure of how much risk you are able to take. So if you are a very mature seasoned trader, you can probably take a higher effective gearing warrant. You can select a higher effective gearing warrant. But if let's say if you are a beginner, you barely know about these index warrants yet, or even warrants, then I would suggest that you go for a lower effective gearing one. So generally, anything below 2 times effective gearing is considered low. Anything more than 10 times effective gearing is considered high. And after you've gone through the first 3 steps here, and you're still left with 2 to 3 warrants, what you can do is actually to screen through the liquidity, compare the liquidity of that 2 or 3 different warrants, and come into conclusion which one to buy. And I think when I mentioned all this liquidity, effective gearing, a lot of investors here will be scratching their head. Coming, what you're talking about? So effective gearing is one of the warrant terms that I did cover during our last webinar on 2nd June. But liquidity is something new. So before I touch on liquidity, I promise that I will show you this particular table where you can use this as a guide on how you as an investors can choose what kind of expiry you should select based on your trading pattern or trading profile. So first of all, if you are a day trader, which means you buy in the morning, you sell in the afternoon before the day end, warrant expiry doesn't really matter to you. You can choose warrant as short as the same month expiry. Maybe now it's June, now end of the month you can't do anything. Maybe if tomorrow onwards July, you can even trade warrants which expire in July if you're a day trader. But let's say if you are short term, your holding period roughly up to 2 weeks, looking at more on the swing movement, perhaps the kind of expiry that you should consider will be ranging from 3 to 6 months. If talking about real expiry month, will be at least 3 to 6 months, is like October until next year January. But for even longer term investors who want to hold that particular warrant position for more than 2 weeks, you should select warrants with more than 6 months expiry, which means beyond January 2022 expiry, maybe February or March 2022 expiry. That will be suitable for longer term warrant investment. Liquidity is something that I think if you have been in the market, it's something that you hear day in, day out. When investors say, oh, that particular stock not liquid, that warrant not liquid, what are they trying to tell us? So if you talk about stock, just the mother share itself, when it comes to liquidity, people look at one thing, which is the traded volume. So when there is no traded volume, means that particular stock is not liquid. So in terms of this particular definition, I kind of agree. I think it's true. But in our definition, in terms of liquidity, is actually how easy you can get in and get out of the stock. So if you are trading a stock which is very liquid, you should be able to get in and get out like within a second because there is ready buyer and ready seller to transact with you at all times. So this concept does apply to structured warrants as well. So that's why I wanted to just compare liquidity and trading volume with all of you. So assume that you have two different warrants available in the market. Both of these warrant A, warrant B, both of them also follow the underlying stock. We assume this stock maybe is a Maybank, trading at 8 ringgit, huge volume traded, 8.8 million shares traded in the morning. You have two choices. You have two options to choose from, warrant A and warrant B. Warrant A saw 20.5 million units traded in the morning, whereas warrant B only has 70,000 units traded. In terms of price-wise, not much of a difference. They are all trading about around 15 to 16 cents. Bid and ask volume-wise, warrant A is lower, while warrant B is much bigger, at least close to 100 times more in terms of the bid and ask volume. So as an investor here, I would like all of you to think it through and consider these two different warrants, and let me know which particular warrant you will choose when it comes to buying. In real life, and you really want to buy it, which warrant A or warrant B that you will actually purchase and trade. I'll give you about 10 seconds to put in your answer on the comment section below. I do see some answers here. I think some say B. Any takers for A or not? Like in this case, warrant A. Any takers? And I think there's a poll up there, so feel free to select your answer. Okay, I do see some A, some B. To be honest here, dear investors, there are no right answer. Okay, as long as you can make money from the warrants, that's a good warrant. So A and B, either way, as long as both of these core warrant, they follow the movement of the underlying stock, then it's fine. But if you were to ask me to choose a warrant which is more liquid, I think better liquidity, I will probably think it's warrant B. Why is it so? Let me introduce a new way for you to identify a liquidity of a particular warrant. So important note here, how do you compare warrants liquidity? There are two things that you need to look at, which is pretty simple. First of all, you compare the bid and ask volume between warrant A and warrant B. Warrant A is showing 46,000 buyer, 78,000 seller in terms of the volume, number of units. But warrant B, you are seeing 1.3 billion units as a buyer and 885,000 seller. So in terms of volume-wise, warrant B is definitely higher. Number two, please compare the bid and ask price, the spread between the bid and ask price. So if you compare warrant A, yes, the volume is very high, volume traded. But when you want to trade it, you need to buy at 16 cents, and when you sell back, you need to sell back at 2 ticks lower. So indirectly, your trading cost is actually higher. Whereas for warrant B, the buy and sell price, the spread in between that is actually only 0.5%. So if you were to buy 300,000 on 16 cents, you can easily next second just sell back 300,000 at 15.5 cents. But you will never be able to do it for warrant A because there are not even enough buyers to buy back from you, even at 15 cents. Probably you need to sell at 14.5 cents, which is like 3 ticks lower than your entry point. So this is the reason why I have been stressing so much about liquidity. So remember how you compare the liquidity of a warrant. Compare the bid and ask volume, queuing there, and also number two, just to make sure the bid and ask price spread is actually on tight. Any warrants below 1 ringgit, tight spread is actually 0.5%. So answer is B here in terms of liquidity. So how do you actually make full use of the 4 simple steps that I have shared earlier? to really put it into work, to make it practical, to be able to select a warrant which works for you. We do have this free tool on our website. It's called the warrant search tool. And I just randomly select the next call, mainly due to the search in terms of the interest for this particular underlying, not because it's definitely going to go up. This is not a recommendation. This is just a case study. I think first step, just to recap, first step, we need to be able to identify whether is it going up or going down. So assume that, let's say if we are bullish on DNX, we select a call warrant. Subsequently, we need to think, let's say if you were to buy, how long do I think it takes maybe to go 1 ringgit? Maybe 9 months, maybe 1 year, not too sure. So if you're not too sure, better to select warrants with longer time to expiry. So I select 6 to 9 months. Effective gearing wise, wouldn't want to select something too high. Mainly is because we want to be conservative as since we are holding on to a particular warrant for a longer period of time. After you're done, click submit, and there are 2 warrants available here on the warrant search result. And if you want, you can actually buy both of the warrants. But let's say if you were to choose one, go for the warrants with higher liquidity. So in this case, in terms of the consistency wise, DNX CB definitely have a more consistent and better liquidity, because you can see the price wise, both the buy and sell price, you will see 1.1 to 1.2 million units during that. Whereas for DNX CA, the bid price a lot buyer, but the sell price there's no seller at all. 136,000 shares, 136,000 units available only. So this is usually how you compare liquidity on this particular warrant search tool. So after going through a bullish, or maybe if you are bullish on this stock, you can use this. Meanwhile, what if you are bearish, you want to select something to allow you to hedge the downside risk of a particular market or a stock, you can also use the warrant search to select a put. So in this case, I'm using Hang Seng Tech, the HS Tech Index as an example. Similarly, you select either a call or put. In this case, I select a put. Time frame wise, I select slightly shorter, 3 to 6 months. Mainly is because if you realize, bear market usually won't last as long as the bull market. So probably a very short life kind of bear market will make you some good profit. In terms of effective gearing, I want to increase it slightly to 5 to 10 times. Mainly is because if I expect something to bad to happen in the short term, I probably want a higher leverage. Click submit. There are 3 warrants available in the market. Yet again, remember my last step, compare the liquidity of the warrant by comparing the buy and sell volume. So in this particular example, HSTech H4 has the highest liquidity, because if you look at the buy and sell volume, this is the only warrant with 1 million on both the buy and the sell price. Other factors that I think all investors, you should consider. But of course, like if you think that there are other factors that I have not included, or other factors that you would like to have more clarification, you merely just need to do is you put it on the chat below. Our admins will actually look at it later and post the question to me at the end of the webinar. Besides issuer, which is very important, I think for day traders, warrant sensitivity is something that they definitely will consider, because if the warrants are more sensitive, then it will move faster than other warrants which is less sensitive. Sold out warrant is something that I think all investors should avoid, because this sold out warrants is not trading at a fair price, which I will share in the next 2 slides. Why is sold out warrant not good for investors? And last but not least, also try to avoid any warrant which is on widespread, because that will actually incur higher trading costs to your particular investment or trading. Sold out warrant. So okay, just doing some survey here. So any of the audience here have you experienced or have you actually bought into a warrant which is close to sold out? So if you have any experience, please let us know on the comments below. Like, probably will be good if you can actually share with us a line or two, like what happened to the sold out warrant subsequently, you make money or you lost money on that. So I'll give you some time to see anyone here actually experience a warrant which is sold out. So I mean, while waiting for some comments here, maybe what we can do is what is low inventory. So low inventory or even sold out, they mean the same thing. So what essentially happened, that to that particular warrant? First of all investors should be aware that every structured warrant has a fixed issuance size upon listing. So on the day that the warrant got listed, we know exactly how big is the issuance size, and the inventory is low or warrant is actually close to sold out when the inventory level is below 10% of the total. So I think one tip for all the investors here is that you must ensure that you check the latest sold out list on our homepage, or you can contact us on the phone, on the email, to actually make sure that you are aware, what warrants are sold out. Even for some warrants which is not sold out, but you are worried, you want to be aware what is the inventory level, at least to have something to expect. You can always reach out to us, to find out more information. So I would like to actually use an example here to explain a little bit more about low inventory or sold out, because this is something that we have seen quite often, especially on the index warrants like HSI. Because once the huge demand in the market comes, then probably the whole issuance can be sold out or low in inventory in just merely 2 to 3 hours. So first of all, let's assume like there are total 50 million units available for this particular warrant. A is up for sale. This 50 million is up for sale. But because of the popular demand, the issuer of this particular warrant A has sold more than 45 million units in just first month after listing. So what happened next is, of course, after that, subsequently, this warrant A will be considered as low inventory, as there are less than 5 million units remaining in the issuer's inventory, which actually makes sense here, because we mentioned that once the inventory level go below 10%, then we will declare that particular warrant as low inventory. And this is merely based on Macquarie standard. Other issuers might actually declare low inventory when they only have maybe 2-3% possible as well. So what happened after a warrant is sold out? Issuer, we will actually consider to actually widen the offer price of the warrant A to discourage investors from further buying into this, because we don't have enough stock anymore. So that's the main reason why we actually widen the offer price. The bid price of the particular warrant will still be maintained at a fair price, but investors can always sell back to us if they wish to take profit. Next, after you understand the definition of low inventory, will be, what is important is how do you identify whether a warrant is actually on a low inventory. So what you can do here is you go to our Live Matrix Plus, look for this symbol, look out for warrants with a cross red color symbol, either on the Live Matrix Plus or our warrant search. So this symbol is telling you that this particular warrant is close to selling out, is actually low on inventory. So if possible, try not to trade warrants with this symbol. Because warrants on low inventory are generally on a wide spread, which I mentioned earlier. Why is it on wide spread? Because issuer, we will actually widen the offer price. Last but not least, why is it dangerous to trade a warrant which is close to sold out? Because the market bid price that you see on your trading platform might not be the fair price. Most probably it will be trading higher than the fair price, which means maybe the fair bid price is trading at 5 cents. But because it's on the wide spread, investors can actually bid higher, and the market price that you see maybe is 8 cents. So imagine if you don't know that it's sold out, you bought it at 8.5 cents, that particular price is definitely inflated. It's six ticks more inflated than what it should be. So that is our main rationale on why we discourage investors from buying into a sold-out warrant. Last but not least, in terms of the warrant selection process, is I think this is a common misunderstanding among investors when it comes to tracking the warrants price changes. Because if you look at the price change, on the KLC screener, even on the platform, it might not be 100% accurate because of a few reasons here. Number one, warrants do not trade as frequent as shares. Some warrants only get traded maybe like 10,000 traded today, and the next trading is actually 1 week or 2 weeks from now. So the price change is not exactly reflective. Number two, some warrants transactions were actually done outside of the market making hours, which means let's say if you are trading HSI warrants, the HSI futures did not move throughout the day, but suddenly the warrant moved up by 50% during the auction, like after 4:50, which is something very suspicious because by right, the warrant shouldn't be moving when the HSI or the Hong Kong market is shut. So the best way to track the price movement of a warrant is still by monitoring the bid price, which is the buying price of the warrant, which you can see on this chart here. The bid price of the warrant is highlighted in orange, and the price of the underlying is highlighted in blue. Why bid price? Because we think that bid price is the most fair, in which this is the price that investors can sell at. So this will be a best representation of the warrant value at any point in time. So if you want to know whether that warrant, does it follow the mother share movement or not, whether it's a call or put, look at the correlation chart on the website, which track the bid price movement at any point of time. I think the next two topics is something very important, especially if you really want to master how to actually trade warrants effectively in terms of profit taking and also your risk management. Because if you don't have all these tools available for you, it's going to be a little bit hard by just trying luck or actually guessing from time to time. So Live Matrix is the first tool that I would like to introduce to all the investors here. I think if you have traded a warrant, this is not something new. This is something that we take pride of because we are the first issuer to introduce Live Matrix in 2014. As our intention, our objective back then was to promote price transparency for warrants so that investors, you do not have to calculate using your calculator, your Excel spreadsheet on what is the fair buy and sell price of the warrant, or even like guess, let's say if the mother share is up 10 cents, will the warrant go up 10 cents or not? So this is a constant guessing game. So we want to eliminate all these risks. We want to show you exactly what you will get if you buy at this price. If you want to sell at 6 cents, what will be the mother share price be in order for that to happen? So with the introduction of the Live Matrix, also help traders, investors to plan their warrant trading strategy effectively. Like for example, today, if you want to do day trading, so you need to actually look at the price chart. Can candlestick, can be line chart. Whether is it possible, if you buy at the current share price, is it possible for you to take profit at maybe 2 cents higher based on the Live Matrix? And last but not least, because we do show buy and sell price, not just the selling price. So you should be able to tell whether the current buy and sell price here, as highlighted in my circle here, whether the buy and sell price is actually on a tight or on a wide spread. So anything which is within 0.5% is tight spread. If let's say it's 5 cents and 7 cents, then probably this warrant is actually on a wide spread. It's no good to trade anymore. So please avoid those warrants. So for today's example here, I wanted to show you one example. It's a call warrant. One example is a put warrant. So for a call warrant, it's pretty straightforward. If the mother share goes up, the call warrant will go up as well. So in this case, we are looking at Astro C29 because quite a number of investors have been asking about Astro, mainly because of the strong news flow on Astro with Disney Plus, with Netflix, etc. So we assume if you want to do a day trading, we want to perform a day trading today at current price 1.12, 1.13. If I were to buy, if let's say right now I want to buy extra C29, what is the fair price that you can buy? It will be 5.5 cents. Whatever you see on your trading platform will must match what you see in live matrix. So if in any events where, let's say if your trading platform is showing like 6.5 cents and live matrix showing you 5.5 cents, then first thing you need to do is not buy. First thing you need to do is don't buy. Call us, let us know that this happened. We will verify for you whether this is correct or wrong before you do anything. So for the sake of this particular example here, after you buy, of course, having to be a very risk-averse trader, what you need to do next is set your profit target, assuming that today is a very bullish day, and assume that Astro touch 1.18 today, you will be able to sell your Astro C29 at 6.5 cents. So whatever we show you here, it will happen. It's a live matrix. This is not a warrant matrix in the sense that it shows you indicative price only. This is live matrix. So let's say if we were to buy back at 6.5 cents and your orders didn't get matched, kindly reach out to us. Please let us know so that we can rectify any issues for you instantly. Not let us know after like 2 to 3 months. That will probably be too late. Okay, and for your information, I think quite a number of you will be wondering, is this available to all warrants? Unfortunately, no. The answer is Live Matrix is only available for warrants which is issued by Macquarie. Either it can be a stock warrant or it can be index warrants like HSI, S&P 500, etc. Next will be a put warrant example, whereby put warrant is totally opposite of call. So you buy into a put warrant when you are bearish on the particular stock, which means let's say we are bearish in Hang Seng, we are bearish on tech sector now. We want to actually short the market. Very unlikely that you'll be able to short the market without having, number one, the futures account. Number two, having to have the license to short sell. But with the introduction of put warrant, you don't have to worry because you can just buy into a put warrant without having to have any license or any margin account. We assume that you are bearish on this tech, and right now it's trading at about 8,400 points. You wanted to short it at 8,400 points and take profit maybe around 8,250 points. So what you can do is you can buy at 13 cents because this is what you can see on the platform and also on Live Matrix, and subsequently put your target price, your sell order at 14 cents. So once HS Tech touch 8,250, Macquarie will automatically buy back from it at 14 cents. So you don't have to worry. So that's the beauty about our market making system, because we are using purely algorithm. It's not robot, it's not human being. So in terms of our reaction time, definitely is the fastest you can see in the market. Just the last note here is just want to highlight again, put warrants always move in the opposite direction as the underlying index or share. So in the event, if you see put warrant moving in the same direction as the stock, mother share go down, put warrant also go down, then probably there's something wrong with the put warrant. So better make sure that is a put warrant, and best way will be to call the issuer to verify. So Live Matrix is a simple table whereby it allows you to see the warrant buy and sell price. But recently we have decided to upgrade our Live Matrix to something called the Live Matrix Plus, which actually allows investors to view up to 9 different warrants all on the same page. So last time you only can view 1 warrant, which means if you want to view like 10 warrants, you need to open 10 different tabs, which is very troublesome. We took into account the feedbacks, the inputs, so we introduced the Live Matrix Plus. First of all, you can select how many warrants you want to display. If you don't need 9, then you can choose anything from 1 to 9. Besides that, we also did a major upgrade in terms of underlying selection. So sometimes you might not have any trading idea. You just want to know, let's say if I'm bullish on Inari, what are the available Inari warrants issued by Macquarie. So on this underlying drop-down box here, you can actually type Inari, click enter, and the available Inari warrants will pop up on the live matrix table below. And the last feature here is you'll be able to refresh. Remember to refresh if you intend to keep these 9 tables there for some time. Don't forget to refresh because the prices might be different on a daily basis. But let's say if you want to scrap off the whole thing, you don't want to actually save it, you actually just click on the reset button. So this is more in terms of upgrade on the accessibility side. We wanted to give investor a better user interface and better user experience. So besides having to have the function to display up to 9 warrants on the same page, select underline, we also added this tab, which is the quick terms tab. So it's just one click away. You can always switch from Live Matrix Plus to quick terms in less than 1 second. So why we have this is also to allow investors to easily compare the warrant terms between 3 or even 4 or even up to 9 different warrants all at the same time. When it comes to comparison, you can be comparing expiry date, which one is longer, expiry, exercise price, effective gearing, sensitivity. All these things are available. And of course, this upgrade you don't have to pay. It's actually all free on our website. So if you can see, there's a QR code all the way to the top right corner. That's the QR code to gain the direct access to our Live Matrix Plus on our website. So don't worry, I won't remove the QR code. I will put it there. All the slides you will be able to see. And if you have any feedback, you think we can further improve, please let us know. This is something that we intend to do in the future, continuously improve our warrant tools to benefit our warrant investor in Malaysia. Last but not least, which is something pretty cool, I would say, we added the enhanced warrant indicators, whereby just looking at the symbol, the logo itself, you'll be able to identify, what does it mean. So for example, if you see a lightning symbol, it means that this particular warrant is very sensitive, very responsive. If you don't understand the definition, you just need to, for example, you just mouse over that particular symbol here, then this particular mouse over pop-up will actually show you. So there are a total of 8. So we have trending warrants, new warrants, high effective gearing, highest liquidity. So you don't even need to go to warrant search to compare anymore. There's a highest liquidity here for you. So once you see this symbol, it's almost guaranteed that it will be easy for you to get in and get out of that particular warrant. Besides having to have the tool to help you, I strongly believe that having to have the right strategy to trade warrants is equally important as well. But before we have any strategy, right, including myself, I think a lot of investors, including myself, at times, we will be quite unsure about where market will be headed, and at times we also need some guidance, like some guidelines that we can refer to. So we hear that the request, and here we have introduced a new warrant tool on our website. It's called the warrant heat map, and the intention here is to make sure that investors, you have the market trends available on your fingertips without having to actually pay or subscribe or anything. It's available on the website. So what it does is, as the name suggests, this particular table, it functions like a heat map. So different color mean different things. So of course, it's a red. Red is it's very obvious. It's when you see a red box, means that particular stock is very, very bearish. So if you see dark green, it's very, very bullish. So that's the easiest way to identify, just by eyeballing it, whether on the weekly, which is short term, and a monthly, medium term basis, whether this particular stock is actually more biased towards bullish or bearish. The second thing you can do is that on the same app, on the same tool, you'll be able to filter. Of course, the filter comes with a lot of selection. You can either choose like a short-term bullish, weekly bullish, monthly bullish. You want like both bullish or both bearish. it's possible. You have around like 8 different selections here. So to check it out, so it's easy as like once you click like monthly bearish. So if there's any stock that falls under monthly bearish, like a medium term bearish, then yes, it will appear on that particular list. Besides having to show the trend filtering, we also added the charts, which is available in 3 to 6 months. So what you need to do is you just need to click on the TA chart column. Here we are looking at the stock TM. Once you click on the chart here, then this particular pop-up window, you can see this pop-up window right on your screen, and you can select either you want 3 months or 6 months. I think the key here is not the chart, the color, and all these things. It's also we have engaged Trade VSA to actually add in their proprietary Pentagon guider, whereby if you see any green Pentagon, it gives you an up signal, and if there's a red Pentagon, it gives you a down signal. So as you can see on this chart here, there are multiple green and red Pentagon. So in end of March, we can see there's a red Pentagon on TM. Subsequently, the share price fall from about 6 ringgit to about 560. And just mid-May, there's a green Pentagon appear at about 560 level, and share price right now went back above 6. So I'm not saying that this is the most accurate tool that you can find in the market. You can always use this as a guidance. Anyway, it's a free one, so feel free to explore it. And last but not least, we can't call this tool a warrant heat map if you don't show some element of a warrant. So if you click on the underlying stock itself, TM, they will display a table of associated Macquarie warrants, which is these warrants are all issued by Macquarie. We show you the bid and ask price, whether it's on high or wide spread, expiry sensitivity, and etc. So generally, like the rule of thumb here, if you see the type under the type column, as long as the warrants is highlighted in green, then yes, you can trade the warrants. But let's say if you see anything which is orange or red, then please avoid, because orange means that the particular warrant is going to expire soon, and red means that the particular warrant is actually low in inventory. Last part, which is the most interesting part, we have a saying, you always keep the best for the last, which is corporate actions, because this is not something that I think even if you attend other warrant seminar or webinar, they won't be touching much on corporate action. So this is considered like plus points for attending, for staying with us all the way until now, towards the end of the webinar. So what is corporate action? Of course, corporate actions, there are many kinds of corporate actions that a company can undertake, like takeover, rights issue, bonus issue, special dividend. But for today's discussion, we wanted to focus on the impact of all these corporate actions on the warrant itself. And mainly this will be a very, back in September last year, this was one of the hottest topics. A lot of investors has been asking us, but we didn't have the chance to really share more. So today I will go through the impact with all of you. So we'll be looking at Top Glove's bonus issue, the 2-for-1 bonus issue, and what happened to a particular warrant after the adjustments. So if you look at the screenshot here that I took from our Telegram, you can see that the exercise price and exercise ratio, they are actually both being revised, like both divide by 3. The original one is 31 ringgit in terms of exercise price. Divide by 3, it becomes 10 ringgit and 33 cents. So it will be adjusted for bonus issue. So how about other corporate actions besides bonus issue? What are the other corporate exercise which will result in a change or result in an adjustment in the exercise price and exercise ratio? So this is the full list here. You can probably take it down. Number 1, bonus issue. Number 2, rights issue. Number 3, share split or consolidation. So example of share split is the MFCB, Mega First. They did share split in the past. Their exercise price and exercise ratio got adjusted accordingly as well. Last but not least, special dividend, which is something very common these days, especially glove makers. They have been giving special dividend almost all year long. But the tricky part is under what kind of condition the issuer will adjust the exercise price and exercise ratio. Only under this condition, only if the special dividend amount is more than 2% of the underlying share price right before going X. So we assume if tomorrow is the X date, this particular stock trading at 1 ringgit, the special dividend that the company proposed is 1 cent. So 1 cent divided by 1 ringgit is only 1%. So there will be no adjustment on the exercise price and exercise ratio. Only if the special dividend amount is more than 2%, then yes, there will be an adjustment. And of course, also to show you what exactly is the impact of that bonus issue on Top Glove. As you can see here, in terms of price impact wise, is zero, no impact at all, because I took out the live matrix on 2nd of September and also 3rd September for this Warrant Top Glove C90. 2nd September is before X date and 3rd September is actually X date. So if you look at the price at 26.08 level, the warrant is trading at 21.5 cents. So if you take 26.08 divided by 3, after the X date, the mother share should be trading at about 8.69. But what happened was, if you look at after the X date, the share price moved up from 8.69 to 8.98, and the warrant price is unaffected. Warrant price still stay above 20 cents, and in fact, it's actually up 1 cent higher than the day before. So this example clearly shows us that actually bonus issue has no impact on the warrant of in the price of the warrant. Common FAQ that I feel everyone should be aware is, does the warrant holder receive additional warrants from a particular bonus issue? I think if any one of you think it's a yes, then please put it in the comments. It's yes or no. Let me know what you think. Do you think a warrant holder will receive additional warrants, from a bonus issue for the underlying? Why I asked this question, because this is the question that I answered the most during September last year. If you think it's no, then probably you get it right. The answer is no, because the number of warrants held by investors will remain the same even after the bonus issue. So let's say if you're holding 50,000 units of warrant, after bonus issue is still 50,000 units. No additional warrants will be credited into your account. Therefore, in terms of the total value of your holding for the warrants will not change. Number of shares are the same, number of warrants the same, warrant price the same. So in terms of the total value of the warrant portfolio before and after the X date should be the same as well. So this is something that you need to bear in mind. So if you have friends who always wonder whether there's any impact, should I sell my warrants before the X date? Show them this video, share this video with them, and show them how we explain it and what happened before and after, and so that at least they benefit from today's sharing. Last but not least, I think if you want to know more information about corporate actions, maybe you want me to explain about other corporate actions, other topics, please put it on the chat below, on the comment section. But for more warrants information, you can actually follow us on our Telegram, which is the #1 warrant Telegram channel in Malaysia in terms of number of followers. We are about 7.3 thousand. Hopefully, we'll be able to break 10,000 followers this year with the help of everyone here. You can scan the QR code in order to join our Telegram channel. It's entirely free. If you are active on Facebook as well, please follow us, like us, as we are planning some interesting activity to be launched sometime in July. For any warrants inquiry, or you really just want to speak to us to clarify on a certain warrants related matter, you can call us on our warrants hotline, or you can email us at our warrants email here, info@malaysiawarrants.com.my. So right now I know it's close to about 8:05. Everybody should be done with dinner yet. But I think right now we do have some time for a few questions. So please remember to put your questions on the comment section below so that we don't miss out anyone.
Okay, thank you, Carmen. I think it was a beneficial session for the audiences. So before we go on to the Q&A, we will drop a link below to get feedback on today's webinar. So do fill in the form so you can know how to do better in future and bring you even different topics. So if there's any different topic, you can write in the form as well. So right on to the Q&A. So before we get to the comment section, do drop more questions if you guys have. I have a few here myself for you, Kame. So in line with this back to basics theme, right, for beginners mainly. So you did highlight some of the things to look up for trading structured warrants today. But I think for the benefit of our audiences, maybe you can give a summary once again.
Sure. I think in terms of summary for today's webinar, I would say today is a little bit more difficult, I would say, in terms of the level of understanding, because it's not as simple as the previous one, whereby it's like 1 + 1 = 2. But I think today, whatever I've shared is really essential if you want to master the warrants trading, making consistent profit from trading warrants. These are the things that I think everyone should know. I mean, it's a continuous learning, I would say, in terms of having to learn more products. Like today, I introduced index warrants, and probably, hopefully, if anyone here is interested, I can also share more about the Hong Kong stock warrants in the next webinar. And besides that, having to understand the available tools in the market that will help you in your warrants trading journey is also very important. So today, I merely just touch ground on the two tools that I feel like is very useful to all the investors: the live matrix and also the warrant heat map. And last but not least, I mentioned about corporate action. Not something that I think you will get information from, even from the market or even on the Telegram groups and channel.
Okay.
All right.
Okay, thanks. Okay, now first question. Is Tanjai here? She's asking, okay, if Warren tracks the movement of futures here, I think she means like the index and all that. So what makes it attractive to trade Warren instead of the futures contract?
Very good question, Jai. I think kudos to you. I mean, you should ask yourself the question. So here's my answer to you. First of all, for futures contract, even for E-mini futures, the margin required is actually quite huge. But for warrants, there's no minimum. You can even buy like 100 ringgit worth of warrants. You can trade with 100 ringgit. So that's the point number one. Point number two, futures are subjected to margin call, which means you might need to cut loss at the level that maybe it's a support level where once you cut loss, then it rebound. Or once you cut loss, you drop further. Warrants are not subjected to any margin call. You are buying warrants using your own cash account. That's number two. Number three, I think it depends whether you have a futures trading account or not. But it will be a little bit more tedious if you were to have like 3-4 different accounts just for trading purposes. Whereby if you trade warrants, you just need to have one CDS account only. So I hope these three main pointers do address your concerns on trading warrants over futures contract.
Okay, we have a question here as well from Donald. Is structural warrant, is it something I need to constantly monitor for long term?
Okay,
Or
so
is it
I
something
just
that should be
wanted to
short or long term?
yeah, short to long term. So in my understanding on short term trading for warrants is actually ranging from like 1 day to 3 days. Medium term can be 2 weeks to 4 weeks. Long term means anything more than 1 month. So it will be a little bit dangerous to hold a warrant more than 1 month if you don't know what is happening. So what I would suggest is don't monitor it every single day, but at least keep an effort to actually monitor on a weekly basis to make sure you are in line, because the last thing we want to happen on the portfolio is that when the last seen is 7 cents, 1 month later when you check it's 3 cents, because why? The warrants, the mother share actually dropped a lot. So it still require a little bit of monitoring, I would say, not 24 hours, but it's just keep a good habit to actually monitor your position from time to time, maybe on a weekly basis, if you are planning to hold it for longer term. But I think effectiveness wise for warrants, actually 1 month, 1.5 months, if you get the direction right, probably it will be that will be the most effective holding period. Somewhere around 1 month.
Okay, I see. I think that answers the question. And next, we have an easy one here. From Astri. Is index warrant? I think it's structured warrants Sharia compliant.
I think we received the same question
Yes,
during the last
we did have
webinar.
the last one.
The answer is no at the moment, but we are working closely with Sharia Consulting, with SA, with Versa, to see how we can make this Sharia compliant as soon as possible.
Okay, Wong Sang here is asking, will the market maker trade on the mother share price so as to indirectly affect the structured warrant price, or does the market maker only stick to the structured warrants?
To answer your question, Wong Sung, I think this is like a burning question among a lot of investors. So essentially what we do is we don't trade the mother share, we merely just do hedging on the mother share. Hedging might be a good topic that we can speak to also, like in our final webinar, which we will inform you on the date later. Hedging means, for example, if you bought like 500,000 units of our DNEX call warrant, what we do is we will go into the market and perhaps buy 200,000 shares of DNEX. That's hedging. Hedging is part of a risk management measure where we need to ensure if the share price does go up, the profit we make from trading, from buying the shares is enough to actually cover the gains that investors make from the warrants. So that's, for us, is actually part of our hedging activity. We don't supposedly we don't just trade, just keep selling just to ensure the price does not go up, and hence the warrant price does not go up as well. That's not something we do, because if you look at Hang Seng itself, there's no way one issuer can actually just keep selling to ensure that the index wouldn't go up, because it's a dynamic market whereby there are so many different issuers, so many different participants in the market. So, yep, I will strongly encourage you to attend our next webinar, whereby I will touch on hedging. So at least you understand a little bit more on how we make money from hedging. All right.
Okay. Next question here from Isan. From Muhammad Nasruddin. I think I can take this one. It's asking HSI or SP 500 warrants, what currency you trade? Because you're trading on the M+ Online platform, you can just trade by ringgit, because it's just like buying and selling stocks on the platform.
Yes, correct. I think bingo, 100% correct.
Yes. Okay. Another one here is from Freeman. Is Macquarie going to introduce NASDAQ warrants into Malaysia? I think this is interesting.
I mean, it's more like I asked you whether you want us to issue or not. Like, not necessarily NASDAQ, to be honest, Freeman. Like, you can always suggest any kind of underlying or index that you want us to do. As long as it's foreign, we will think of a way to do it. But to answer your question, yes, we have been thinking it for some time. Hopefully, we will be able to actually list it maybe in the third or fourth quarter this year. Fingers crossed.
Okay, if you guys are interested in this, please type NASDAQ in the comment section or any underlying that you guys are interested in.
Yeah,
Okay,
I think
from. Sorry. Yeah.
No, I think that will really help. I think what Don suggested, put NASDAQ there so that, at least, the algorithm will help us to capture exactly what will be the number one underlying that all the investors are wishing to trade in Malaysia. Sorry to interrupt, Don, please go ahead.
Yeah, no problem. We have one from Magat here. Do you consider having an estimated daily price data table for warrants search in the near future?
Yeah, I think that is something that we have been working on in terms of upgrades, because just now I mentioned about the upgrade on the live matrix bars, introducing warrant heat map. Probably it's time for us to also upgrade our warrant search. So noted on your feedback, Magat, thank you so much. That's something that we will do on our next upgrade. So hopefully during our next sharing, maybe a few months from now, we will be able to show you the new phase of our warrant search tool.
Okay, I see there's some interest in there's NASDAQ, there's SGX, there's Nikkei. So maybe something for you guys to look at Macquarie.
Yep. Keep the suggestion coming. Of course, the more you type, then the probability that we can list is also higher.
Yep. And okay, I think I'll do one last question, because I noticed that Shanghai index has been going up lately. So is it like a good time to look at the new tech stocks warrant that you guys just launched?
Yes, definitely. But of course, I think to further elaborate on your questions, Don, maybe not just Shanghai generally the China tech especially I think a few days ago we have been talking about China. So China has been really bullish, in May. Instead of going down, China has been pretty bullish, outperforming the market. And if you are really interested to trade the China market, I suggest that you look at the A50 China warrants that we have on Bursa listing itself. On Bursa Malaysia itself. So what you need to do, very simple. Open your M+ account, type A50 China. Then you can actually find the score and the put warrant over that particular index. So this is trading China market as a whole. But let's say if you are very particular, you are particularly bullish on Alibaba, or you are particularly bullish on Tencent because you think that the e-commerce is going to dominate the world, Tencent, Alibaba, Meituan, they're all e-commerce. So you can actually gain exposure to this particular stock. Either you want to go long or you want to go short. Bearish or bullish also you can look at it, because we have just listed a series of 8 warrants whereby we have 1 call and 1 put for Alibaba, 1 call and 1 put for Tencent, same thing for Geely and also Xiaomi. So for more details about all these underlying, if you any Hong Kong stocks that you want us to list in Malaysia as well, please put it on the comments below, so that at least we will definitely notify on your comments, so that we take into account your feedback, so that we can bring the best product to Malaysia. But generally, I would say in terms of the trend-wise, for Hong Kong lately in the past 1 week has been pretty sideways. But July might be a good month to look at it again. So make sure you equip yourself with the knowledge and know what are the available warrants in the market, especially for China markets.
Okay, thanks for that. Okay, I think we're way past 8 p.m. So coming, you want to introduce the next coming webinar?
Yeah, I just wanted to wrap it up. This is the second webinar we have with M+ under the Back to Basic webinar series. So we will be having our final one for this particular webinar series on the 14th of July. Same time, 7 p.m. But the topic that we're gonna focus on is a little bit more practical, I would say. Is real life warrants trading strategies. Where I will share with you a couple of strategies that I have learned and I have identified in the market, which will benefit investors when it comes to really real life trading. And I will also add some elements of like how to actually make full use of the live matrix plus warrant heat map, tools like that to further enhance your overall warrant trading journey.
Okay, awesome. So thank you, Carmen, for being here with us today once again, and thank you to Macquarie as well. So, and thank you to everyone for tuning in today. We hope you learned something new, and please do join our webinar on the 14th of July to learn some practical strategies on trading structured warrants. So
Yeah.
do follow us on Facebook to get the latest update on the next live webinar.
All right,
Carmen,
thank you.
you have something?
Yeah, I just wanted to say, like, if you have like a particular topic that you wanted us to share in terms of, for example, like how to trade a downtrend market, we can probably share some strategy on that as well. So whatever you need, whatever you'd like to hear, just give us a feedback on the comment section.
All right. Thank you, everyone, and have a great evening and stay safe.
All right, thank you. Have a good week.